Hey everyone, me Kevin here. Warren Buffett just played us, and I'm going to explain exactly how pretty much we got screwed by the Snowflake IPO. Because Snowflake IPO today, it is arguably the hottest and most anticipated IPO we have had all year, and the biggest software IPO ever. And it literally just IPO'd and destroyed expectations. In fact, the stock was expected to IPO at a price of $75 to $85, and we knew it would go up above that, but how much? I mean, whatever, I don't know, $20, $30, right? But then they raised the price target to $100 to $110 a share, and then they said, you know what, that's too low, let's raise the target to $120. And that's what they ended up deciding to price the stock at, $120. The problem with that is nobody actually got it for $120. Because all morning long before the IPO, all of us were able to go into our Robinhood or Fidelity or TD Ameritrade or whatever, and we were able to punch in, well, I'm going to set a limit order. I'm going to set a limit order of 150 or 140 or 130 because I want to get in on the Snow IPO. Well, in case you wanted to get in on the Snow IPO, Snowflake IPO, and you ended up putting in those limit orders, there's a good chance the market makers got to look at all of our limit orders and say, looks like we can charge more because there's so much demand. And then they go on CNBC and they say, looks like right now we're probably going to release around 160. Okay, now we're going to do around 200. Okay, now we're going to do around 240. Because they get to see all of our limit orders. They see how much demand there is. So we're basically bidding the stock up against each other. And boom, come about 9:35 this morning, the stock gets released and the first sales go out at $245 per share. It had doubled instantly in value from 120 to 245 because nobody was willing to sell it for anything less than 245. That's how the market works. And so pretty much any of us who got in on Snow today, we're not up double on our money. We're up, well, given where it's sitting right now, a few bucks from what it IPO'd for because it's at about 252 right now. Now, in fairness, it ran up to $319 minutes after the IPO. It was like a straight line up. And since then, it's been a little volatile. But talk about crazy. An IPO at 120 is the IPO price, and now it's at 254. And it ran up to 319 within the day. And so this to me, first, we're going to talk about Warren Buffett, but I just want to give you a warning. This is the mega hype right now that you probably don't want to be investing in. Okay, let's talk about Warren Buffett, and let's talk about some problems and my predictions and expectations for the stock and what I'm doing. So here's the thing. One of the reasons this stock was so heavily hyped in the first place is because Warren Buffett from Berkshire Hathaway and Mark Benioff from Salesforce each invested about $250 million into the company's private placement, which is basically a fancy way of saying they got to go in line at the buffet before all of us. And they got to buy these shares for $120. So Warren Buffett comes in and goes, $120? I'll buy 250 mil. There are even reports that he may have bought an additional 4 million shares, which would be about an additional $250 million. So he's potentially in all the way up to 500 million. Either way, they're going in, buying all the goodies at the buffet. And then they open up the doors to us, the public, and boom, they raise the prices double. And Warren Buffett's like, just doubled my money. I always told people I wouldn't buy into an IPO and I wouldn't buy tech companies that I didn't understand. And I don't understand them, but I ain't buying into an IPO because I got in before everyone else and I just doubled my money. Yeah, this is exactly how the rich get richer in this country. Yay, you get first dibs? No problem, you just doubled your money in seconds. Everybody else, we're up a few bucks. Maybe, unless you were that unlucky person who bought it at 319. But anyway, what does this mean for us right now? Well, first, this brings up one of my favorite rules when it comes to investing. When possible, do not invest in the hype. Stay away from the hype. It's a very dangerous time to invest when things are going euphoric. When it's like, oh my gosh, I can't lose, it keeps going up. Ugh. I stay away. It's like Tesla. When Tesla was doing that euphoric run up just a couple weeks ago, I'm like, this will not sustain itself. It will come back down. There will be a cheaper time to buy this. I said it on my live streams and with my course members. I said it on the channel. The euphoria with Tesla runs usually for 14 to 21 days, and then it goes right back down, and then it starts its path again, or it trades sideways. You know, there's some funny patterns with Tesla that you can see. But here for Snow, we don't have patterns yet. All we know is that we are at peak hype. In fact, Snowflake is very likely to be on news headlines for the rest of the week. And my expectation is we're going to have massive hype at this stock probably for the next couple of months. But I personally prefer to invest when there's no hype, kind of like when you've almost forgotten about the stock. Think about Lemonade. Lemonade is a stock. It's a tech insurance company for homeowners and renters insurance. Lemonade is a company that IPO'd at about $48, shot up to like 90-something dollars per share, which was stupid. Like stupid euphoria, like bad pricing. I always said, like, buying Lemonade over 70, not good. Buying it, in the 60, under 60, better, much better. That's sort of my valuation POV for Lemonade. Now, the cool thing is, Lemonade has so little hype. It's trading at $48 a share right now. It doesn't mean it's a bad investment because it went down. To me, once you get to that cool down phase in an IPO, it's like, Now, I'm not suggesting go heavy on Lemonade, okay? Lemonade's like 2 to 3% of my portfolio. That's it, and it's a long run hold. But what I want to say here as a warning is be careful of this massive kind of that hype ride. Now, I could be wrong. Snowflake in 2 months could be trading for over $300. It could be trading for over $400 a share. And you know what? The hype sustains itself. Great. Greatest IPO ever. Holds its strength. But just know it's not uncommon for these IPOs to start declining substantially once the hype wears away. And an interesting thing to remember with Snow is the share lockup expirations that are coming. This is basically going to dilute the public float. So let's explain that and understand that a little bit simply. This is page 130 of Snowflake's S1, which is their public filing with the Security and Exchange Commission. And if you didn't understand the last 2 sentences, forget about it. Don't worry about it. It doesn't matter. Basically, right now, think about the buffet. Right now, there are 28 to 32 croissants at the buffet table, except these are millions of shares, okay? There are 28 to 32 croissants at the buffet table. Mark Benioff and Warren Buffett already got their pieces, and everybody else is scrambling over what's left. Well, the cool thing that happens is around 91 days after the date of this prospectus, which is a little tricky because there have been amended prospectuses, whatever. So sometime between November 26th and around December 13th, there are going to be an additional 11.2 million shares. So look, they're going to bring in a new fresh batch of 11.2 croissants for us to buy. I'm getting hungry using this analogy. Which anytime you increase the public float, what you're really doing is you're giving the market more available shares, creates potentially more selling pressure because unlocking a share lockup agreement basically means people can now sell their shares. 11.2 million more shares are available to be sold to the public market, which could potentially create some selling pressure. Especially, consider this, around what usually happens around November and December, you start getting towards the end of the quarter and you start getting hedge funds that say, we need to rebalance, we need to take some profits, and all of a sudden you start seeing some selling pressure. So we're gonna go from 28 to 32 croissants to 11.2 croissants on the table, or in addition, which means realistically, let's go with 32 here, we're gonna be somewhere around 43 croissants on the table all of a sudden. Well, that's a lot more than we've got on the table right now. But that's not even the rough thing. The rough thing is that about 15 days thereafter, so I'll put 15 plus thereafter, they can release another almost 38 million shares. So another 38 croissants. Let's put this in line right here. So let's go ahead and say they get to release another 38 million shares, which means 15 days after, they get to release another 38 million shares. There we go. Which means we're going to be somewhere around 81 million shares potentially on the market by the end of the year. Which, if we look at 32, that's more than doubling the public float by the end of the year. And so think about the factors right now. We're at massive peak hype right now, and we're going to get potentially two and a half times more shares available by the end of the year. Like, when I factor those things together, I would rather buy in the low hype time and when all those shares are available, because I think there's a good chance I might get a better price. Now, no guarantees, but if I was playing roulette and somebody told me, hey, you could go red and ride this wave, you know, you got a 49% chance of being right, or you could play the house and have a 51% chance of being right, I would say this is the 51% chance of being right, that there's gonna be some selling pressure towards the end of the year on this one. And keep in mind too, look at the restriction on the 38 million shares. The restriction says that the 38 million shares only come out if the stock price exceeds 133% of its IPO price. Well, that's some easy math because it IPO'd for 120, not the 245. The IPO was 120. The first purchase somebody was able to make after the IPO might have been like $245, but the IPO price was 120, which means 120 times 1.33. As long as the stock is above 159, those shares release. And as soon as those release, boom, they're out. And in theory, it could go lower than that. Now, do I really think it's going to go under, 159? Well, let's talk a little bit about that and try to understand my theory here. My valuation of this company is just somebody who doesn't even fully understand Snowflake. In my bullish thesis is that this is a $200 stock, which for me at hype level max, way above my bullish thesis, and the fact that we got all of these extra shares coming in the future, I'm not super interested in buying it over 200. Now, I can't look into a crystal ball and say for sure it's gonna go under $200, but let me just put it this way. If Snowflake, come Christmas time, is under $150 per share, I'd be willing to back up the truck and start loading up on this stock. If it's under 125, I'd get even more excited. That's kind of that range right there where I would love to buy this stock. Otherwise, hey, look, if you're a long run holder of this stock, this might be a great company to just ride the tech wave on. Look, I'm heavily invested into companies a lot of people think are overvalued. Tesla, Apple, Etsy, Redfin, Peloton. Peloton's a little pricey, I'll give them that. And that's not to say that's a bad thing. This tech market can keep running, and Snowflake might be the perfect example of that. But for me, I'm gonna wait for hype to go away, and I'm gonna wait for those shares to come out. And then I'll make a decision then. So thank you so much for watching. Hopefully this helps you have a little bit of a better understanding of Snowflake. Again, no guarantees. Nobody knows exactly what's going to happen. But what we do know with certainty is that these extra shares do expire, like their lockup agreements expire, which means they're available to come on the market around the dates that I mentioned there by the end of the year. Again, which sort of aligns with end of the year selling pressures that we sometimes see. So there you have it. Thank you so much for watching this. If you liked it, please consider sharing it. And folks, we'll see you in the next one.